Hi there, welcome back to the Open. As we head towards the second hour trade, here's the picture as far as the local market is concerned. Actually just pushing up into positive territory, we're up 5.5 points, 6,333 at the moment. The banks in particular leading the way, as well as some individual movers. Telstra, I should flag, up another 2% at the moment, $3.12.5. So a big move for Telstra, as you can see on screen. It's actually doing a lot better than what it appears to be on screen. As mentioned, it's up about 2%. Some other individual movers, in particular those that had reports out this morning. We're going to get to that next hour. For now, though, actually might reflect on what some investors have been doing, courtesy of some of the reports out this week. Get across all the latest investor behaviour. For that, I'm pleased to welcome Gemma Dale, Director of SMSF and Investor Behaviour at nabtrade. Gemma, thank you very much.
How are you doing?
It must be fascinating during this period to see what clients, what investors are doing, because if you're going to be doing some big moves, this is an interesting time to be doing it. Are we seeing big decision making?
This is the first time in probably 18 months we've seen actual structural shifts in people's portfolios. We have a very retail investor base, mums and dads, SMSF, this kind of stuff, and they have pretty vanilla core portfolios built of financials, Telstra, they'll have some BHP and Rio. They've got exactly the names you would expect them to have, and then tend to overweight the large caps vastly more than the index, right? So they're very overweight this stuff. And we've been talking for a long time about the sector concentration risk in these portfolios, and maybe you need to look a little bit outside that stuff for some opportunities. And we've started to see real wholesale reweighting of people's portfolios for the first time.
At the core.
At the core.
Right.
And it doesn't seem to be price driven, which is really, that's what's surprising me the most. And it doesn't seem to be results driven either. So the one that would be a classic example was ANZ, 97% sells on Wednesday when the price went up a little bit.
Yeah.
But not enough to make it a meaningful reason to sell 97%. So this huge shift. So normally we would see sort of 45-55 sort of buy-sell ratio, like not massive in these core parts of the portfolio. We don't see it unless something really meaningful happens in the stock. But now we're seeing, even when there's only very minor movements in price, people are moving hard. Yesterday, Telstra's up a little bit. It's gone over the $3 mark, 80% sell. So people are going, I don't think there's a lot of upside here. I'm going to take what I can and I'm going to leave. It's really astonishing to watch. First time we've seen that in a long time.
And are we seeing then elevated cash, or are they actually then looking at the profile of the portfolio and actually buying off the back of what they're taking out of the market? Yeah,
so this is a question we had to ask. I was like, where's the money going?
Yeah.
So our cash book is very high at the moment, and it's been building over the last 2 years. So people have been waiting for opportunities. They've been wondering about where the market is going. This sort of march higher has been a surprise to, I think, a lot of investors. But it's not rapidly growing at the same rate people are reweighting out of their big portfolio positions. We are seeing a big shift into international. So international volumes have doubled in the last 2 weeks, which is very interesting. Tencent was a huge buy in the last couple of days.
Really, the stock that's been hammered, of course, the big Hong Kong China tech stock.
Yeah, so what we've usually
very contrarian at the moment.
So we have usually seen contrarian behaviour in Australia and riding the trend internationally. Now we're seeing the opposite, that people are starting to do a structural reweighting in Australia and trying to buy on the dips globally.
I mean, what do you put that down to, particularly the added, clearly, level of confidence in terms of what they're doing with their international holdings, a greater level of familiarity with international shares and more confidence to take those sorts of bets?
I think that's a really good way of explaining what's happening. They're much better educated now. A lot of the names, Tencent 2 years ago, most Australians would never have heard of it, investors included. Now it's regularly in the paper. People understand the drivers of some of the major shifts in what's happening revenue-wise and so on. So if someone says Chinese government's now clamping down on X, Y and Z, they know what that means and the likely impact of it, and they can take a view on what it means for the future and trade into that. So we wouldn't have seen that a couple of years ago. We'd be like, 10 what? What do they do? Where does it sit and what do they make money from? So there's a much better understanding of the large caps internationally now, and people are buying them because they can see where it fits in a portfolio.
So what do you make then of this, rather sizable shift as far as portfolios are concerned, in terms of what is it telling you about behaviour and views on the markets?
There's a couple of things. I think the most obvious one is we've talked to people for a long time about the concentration in their portfolios. You're heavily concentrated in financials. You're heavily concentrated in telcos, by which I mean Telstra. And there is a lot of risk in one stock and one sector that dominate the Australian marketplace. People were still happy to sit on it, right? Because they had got great yields, they could see the value, they'd had wonderful experience for the last decade or more, and there wasn't a great incentive to move. You can see the sentiment changing. So as I said, it's not price driven, it's sentiment now that is causing people to shift away.
And do you have any insights as to why now?
I think the Royal Commission's a big driver. So when you see that negative press every day, and I think after the first couple of sittings, they were like, okay, this is not flash, but we took a break.
Surely that's the worst of it.
Surely that's the worst of it. So the consistency of those messages coming through makes you feel that there may not be a lot of upside. But also people are seeing stories about the housing downturn. You know that credit growth is not going to be dramatic in the future. And so when you think, look, where is the upside? A lot of people are happy to not worry too much about upside because they were comfortable with the yield. I think there's a bit of concern coming through that maybe the yields won't be maintained at their current level, in which case, where do I look for other opportunities?
Fascinating. Gemma, thank you as always.
Thank you.
Gemma Dale there from nabtrade. We need to take a break. When we come back, second nabtrade line for you, so stay with us.
You're watching Sky News Business, Australia's business channel.